Good morning, everybody. Welcome to the Market Institution Live Trading Room. Today is October 10th, 2023. Please take note of our disclaimer. I'll recover it when we start. Wanted to make sure that you have the prep screen. Make sure you mark your zones for the prep screen zones. And trading tip of the day, you can get a lot of the little nuggets that we cover in the live trading room. Check the news, economic reports, and Fed speakers that are coming out. We'll cover all of that and more once we get started in just a few minutes. Good morning, everybody. We'll get started here in about 10 minutes, right at the top of the hour, as far as our live trading room gets going. I would like to direct you all out to the Discord room. If you're have not signed up for our Discord room, I will place the link in the chat for anybody that may be watching the video and wanting to participate in the Discord room. I'd like to also point out that in the Discord room there are some new announcements from the TMI team talking about new things that are coming up, and make sure you keep up to date on how we're doing our transition. I'll talk about that more as we start our live trading room session as well. Good morning, Carlo. Good morning, everybody. We are about 5 minutes away from starting our 4 minutes now. It's stuck for when we start. Please get your zones posted on your charts so you kind of see the reference points. And we'll get started with our pre-market routine in just a few moments. Good morning, Miss Liz, Stephen, Joe. Glad to have everybody here. All right, let me refresh my coffee and we'll go ahead and get started. About 3 minutes. Good morning, everybody. Get everything set up here. All right, let's go ahead and start rocking here. Got a lot to cover today. Be cautious on the trading side of things because many of the market participants are still coming back from holiday last week. Also with outbreak of war, there's going to be a little bit of trauma coming in. Okay, so it's sit back. Let me do a lot of the work for you as we get going. Keep in mind, the information contained in this presentation should not be construed as a recommendation or an offer to buy or sell any security or financial instrument. Information contained in this presentation does not imply the suitability of any investment strategy. We are not licensed brokers or investment advisors. All attendees to the presentation and purchasers of our content are encouraged to speak with a licensed representative of their choice regarding the appropriateness of investing, trading of any investment, and any trading strategy. We are using real-time market data. We'll be executing trades in a simulated account during our presentation. No offer on our part respect to the sale or purchase of any security is intended or implied. Nothing contained in here should be construed as a recommendation to take a position in the market. The intent of this information is for instructional and educational purposes only. Any fair use of third-party trademarks or logos does not imply an affiliation or a sponsorship. All trading involves high risk. Past performance is not indicative of future results. We make no promises, guarantees, warranties suggesting that any information shared will result in a profit and not in a loss. You agree to not hold us legally or financially responsible for any reason. All right, good morning again. Let's go ahead and jump right in. This is a daily market overview. Okay. I want you to make sure that, and we'll come back and check out each one of the equity indexes. We need to talk about the treasury markets, biggest bear market here. Let's jump out and check the news and see what's in the headlines. Now, one of the resources that we use, or that I use myself, and there's several of them, is to get out there and see how the public is being directed, okay? Now, almost every time you see a bear or a bull on the front page, it usually means the market's going to do the opposite of what that implies. You know, bear markets, tend to go down. So that first direction this morning, as we look to get things started, it may be to the downside, getting everybody thinking the market's going to sell off, okay? What we have to keep in mind is everybody that was participated in the holidays last week, especially our large part of our Jewish community, was participating in some of their holidays last week. They're coming back. Yesterday was Columbus Day. The banks and the bond markets were closed. So we're going to see some of that shuffle. As the big players start coming back into the market, prior to this, they were all hedged to the upside and to the downside so they can enjoy their holiday. It takes a day or two to unwind all of that hedging, okay? Momentum traders are set to buy the S&P in every scenario, Goldman Sachs, okay? Treasury market has become the worst bond bear market of all time, okay? Generally, again, when they post that bear market up there, people are thinking, oh, let's keep shorting. When generally the news prints it, it's already happened. Good morning, Christina. Yes, yeah, thanks for answering that, Brian. Yeah, I do want to remind everybody that a couple of things that are going on through this transition phase, okay, and we're making some massive improvements, okay, from what we had before. I want to direct everybody that has not been participated in the Discord room. There's a lot of announcements. There's some new tabs over here. I posted this one today, so if you want to get my pre-market prep, you can get access to that through the Discord community room. Pre-market prep, you can see the dates on there and the potential trade candidates for my trading style, okay? So I trade a lot of the futures products, and this is where I'll be posting that. I also want to point out that as we get started this morning, we do have a couple of announcements that you guys need to view and pay attention to as far as what's coming up. This is from our TMI team, okay? Got a whole team of folks behind me now that are really doing an outstanding job in putting everything together and getting things organized. It's taken a little bit of time, but you will start to see that with these announcements coming out, we have a new payment system. Non-subscribers, you can choose to pay with credit card, Google, Apple Pay. Not set up for Bitcoin yet, but eventually one day I would like to have that, just kind of as a collection there. But there's any questions about what we have going on, you can do the admin at themarketinstitution.com. And I did have a few requests for some one-on-one coaching, and I'm going to have to schedule that out, but it is available for anybody that wants that one-on-one coaching. We got 5 90-minute sessions that we have posted there. You can go out on our website and register for that, and so on. So our general chat, we are building a huge database right now, and just want to welcome everybody that's new to what we're doing in here. So back to the news. Let's take a quick look. As we start talking about the Treasury market and the bonds, they are on the watch list here. As far as what we're looking at on the bigger time frames, I did break these down to smaller time frame. 5-year is at that breakout point. Okay, so make sure you reference that. 10 years still a little bit further away, and I don't think I had a good setup on the 30-year, so I didn't post that. In the pre-market, I have only one position right now. I am long wheat. Okay, that did trigger while I was doing my pre-market prep, so I'm going to change the background color on that one. Okay, what else is on potentially ready? Okay, we got gold, nice little demand zone, 1864.30, 1862.20. Okay, we also have copper on deck and a couple of the FX products. Bean oil also, I'll be getting into that one as price starts to come back out of there. I'm waiting for the markets to kind of give us a clue that they're ready to move to the upside. Let's see. Let me stay on task with what we're doing here. So let's go out to the S&P. Let's identify the zones. Before we do that, crude oil, okay. Well, I'm a little more on the bullish side on crude oil because of recent news. We have just completed our first 5-minute candle, okay, and the open range breakout at 86.06. Okay, which is also right where the volume weighted average price is at. Okay, so there could be a move to the downside or the upside with the open range breakout trade on crude oil, which is one of our strategies. Okay, open range breakout, ORB, is taking that first 5-minute candle of the crude oil and marking the high and low. Okay, using a larger time frame to kind of see the direction that price may move. We use the high to take the breakout trade, 86.06 going long, 85.86 to go short. Okay. Now once I'm filled, I'll come back in and place my protective stop loss.
Order filled.
Okay. Oh, there we go. Stop loss needs to be in place, 85.86. And that's now in place. Okay. Now, the open range breakout is basically taking a larger time frame, choosing a direction, using that first 5-minute candle right as the pit opens up on the crude oil, and then looking to go long when it breaks above or looking to blow short when it breaks below that first 5-minute candle. The premise behind this is that the pit session is the physical market, okay? And when that physical market starts to come into play, okay, that's when futures adjust up or down to the physical market, okay? So a nice little trade on that. Stop is in place. I'll let this work for just a few more minutes while we go and check out some of the other products. But a nice little move so far. Yeah, nice at all. All right. So there you go. Now, I would direct your attention to this. If you take a few of these trades in here for your own account, and I'm not recommending that you do, I'm just posting what I'm doing at the moment, you can see very easily that your tuition cost and subscription fees can get covered in just 1 or 2 trades in a few seconds, often just a few minutes, okay? So check out our subscriptions, and we have everything priced in a way so that students can recover what they put out for education. As I said, we have a team of people behind me, so that team requires to get paid as well to keep backing me up, okay? All right, so we have crude oil, and we just got filled on copper, okay? So copper was one of our additional trade picks. Okay, taking a number taking a confirmation entry off of that. Let me just change the background because that one is triggered. Okay, and I need to certainly get through our process so I can get onto the bean oil and the corn. Okay, so let me get stop loss in place for copper. And we're trading the December contract, which is Z, HGZ23. All right, at HG. Wanted to change this one, HGZ23. Okay, so let's get back in there and get a stop loss in place. I'm going to come in right around the low of the session. Now, if the size of the zone is too big and your stop loss is more than what you're willing to risk, the nice thing about some of these products is some do have micros, some have minis, some have both. Okay. Let's go up to our equity indexes. All right, so as we are looking at our equity indexes, I want to direct your attention back to the trading tip of the day. Treasury yields broke that support, okay? And that requires us to go out and look at that picture on the price chart there, okay? So I'm using TradingView. The Treasury yield has been a very big inverse odds enhancer to what the markets have been doing. Treasury yield goes up, markets go down. Treasury yield goes down, markets go up. We broke the support area on that Treasury yield, okay? And now price is back up to that support. So broke support and bounced back up. So kind of a neutral area. We also want to keep in mind while we're out here is that TradingView does provide us with a couple of other additional pieces of information like the trend. The pre-market trend, we have a very, very low reading on the trend. If the markets are moving up and the trend is low, it's time to go. If the markets are moving down and the trend is high, it's time to buy. TradingView allows us to see the pre-market trend, and we use that as part of our assessment of whether markets will move lower or move higher around the session open. And then it's also check the dollar since we're over here. Dollar on a 30-minute chart has been in a downtrend in the overnight session. With that downtrend, we have to be aware of where we have other zones and potential places where the market may change direction, okay? The trend is, on the 30-minute chart, making lower highs and lower lows, okay? So it is a little more on the bearish side. The dollar is inverse of the equity indexes, okay? So dollar going down, pressure to move to the upside. 10-year Treasury yields, not the notes, okay? Treasury yields also making lower highs, lower lows, lower high, and what remains to be seen if we're making lower lows, okay? Remember, the dollar and the Treasury yields are inverse related to the equity indexes in these market conditions, okay? And I want to remind you it's in these market conditions, okay? Because there will be times when things like this start to change and we need to be able to change with them. So, Treasury yield broke support as the session opened. Yield has been directly inverse correlated to the indexes over the last 5 to 6 weeks. We also want to note that we have a small Globex session as pre-market starts out. Okay? The small Globex session also implies that there are longer running trends that we need to pay attention to. Yesterday morning we had a small Globex session or Globex range. What do I mean by small? Well, we take the Globex range as it is right now, about 14 points on the S&P. We compare that Globex range to the daily ATR. If the Globex range is less than 40% of the daily ATR, it is a small Globex range. Small Globex range often leads to longer running trend during the regular session. Okay, so we're going to be looking for staying in trades a little bit longer. Okay. We also need to note that on each one of the equity indexes, back out to our prep screen, okay, small Globex range, most of Wall Street traders returning to the floor today. Dow stocks, very light volume in the pre-market. We just checked the trend, and we only have one economic report coming out at 10 a.m., but 4 Fed chairmen speaking throughout the session today. Note, when the Fed chairman starts speaking, we might get some volatility in the market. Okay? Now, Dow 30 stocks over here. Taking a list of the Dow 30 stocks. Let's see. So, light volume, as we're about 15 minutes away from the regular session open, very light volume. What does it mean when we have light volume? Well, light volume, high volatility. So, big whipsaw action potential, especially with the Fed chairman starting his speech at 9:30 as well. Okay, prep screen zone is just slightly above. We have filled the unfilled inside the gap on several of the indexes that were still left up here. S&P did that yesterday, so did the NASDAQ. Today, we're looking at that prep screen zone, price moving to the upside, and also looking at the demand zone as price moves to the lower side, okay? The circled area here, a very light volume, big price movement. We call this a pocket of points. Price starts breaking into this range, it easily drops to the lower zones, okay? We want to make sure that we understand the difference between a dead space, okay, and a pocket of points and a gap, because these are all areas that price moves through. To stay in trades longer, we need to know that.
Order filled.
Okay. Looks like our crude oil, we're on the other side of that now, taking the breakout to the downside. A copper trade doing well. Okay. So let's let that one work. When we're using this type of formation or setup, we have our resistance, buy territory, break of that resistance area, and then price coming back down. Okay, so the map that we're talking about in the Mastering the Charts course is you have an opportunity to take a short-term trade on a breakout. Okay. You also have the opportunity to take a trade when price returns to the origin of that move. Make sure your zones are always going to be in a buy territory and below a resistance area, okay? After all, the banks and institutions leave a very nice footprint, and we want to see where we have that opportunity to participate in that, okay? There are some other drawing tools that we can use. Fibonacci price extension line, where we can take just 3 points and identify where we have a high probability of profit potential. When we use this tool, this first line, target 1 versus target 2. Target 1 is just basically half of the AB leg applied to point C. 85% of the time, you get a move up to that point. 40% of the time, you get a move up to the target 2, which is basically taking the AB leg and applying it to the CD leg, okay? This afternoon, or after the live trading room, I will be doing a course that everybody's still welcome to join. The link will be in the Discord room for the Mastering the Charts review and recap, okay, where we take a deeper dive into understanding the live trading room and what trades we took, why we took them, and also taking a deeper dive into some of our structures, shapes, patterns, and we continue to trade through that. So be looking for that link in the Discord room. And we start that about an hour after I complete the morning session. Back to the NASDAQ, okay? Now, price currently is in a pocket of points. And if you go over to the left-hand side of your chart, you will see that this was a light volume, strong move to the downside. Currently on the NASDAQ, okay, we're an outside day, so we can trade breakout trades. The overnight session has given us a resistance level that has been met 3 times, okay? That's our minimum requirement for taking a breakout trade, okay? So, pocket of points, prep screen zone up above, looking to take the breakout above the Globex high, up to that prep screen, but mostly because we don't have any resistance to the upside, okay? Now, currently, the stocks that make up the NASDAQ index, the large market cap weighted stocks, are a little mixed, but they are on lighter volume, okay? So one of the trades that I'm going to participate in this morning and set it up ahead of time is taking that breakout above 15,241, quarter, 241, quarter, okay? So I'm placing that trade out there ahead of time. The target, 15,361, and I would also just say, right as price finishes the pocket of points, let's use, we probably could look at target 1 and then target 2 right at the prep screen zone, okay? So potentially a nice move to the upside, okay? Taking a breakout at 242, going up to 318 on the NQ. Okay, yeah, I'll come back in on that one.
Order filled.
And, okay. Nice. Thanks for mentioning that, JP. Yeah, always remember, I'm trying to monitor in the chat as well. Your eyes are helpful, okay? So there's a second trade on the open range breakout to grab a few bucks, okay? I want you all to also, when you have time, take a look at the natural gas, okay? Now, natural gas, I just started noticing a little behavior, and I wanted to get some additional information. I noticed that when we made these tops, okay, they're all pretty similar, and I noticed that there was a time, okay, 33 days, 38 days, 45 days, and this last one has been about 61 days, okay, where we made a peak. I also want to point out, the average drop after it. And I did pick out a couple of personalities where we made that double top, okay, and then that moved down. So my expectations for natural gas is to find a time frame, smaller time frame, whereas I can manage risk and get into that trade ahead of time to play potentially a 59-cent move down, which is a pretty significant payout back down to a level of support, okay? I'll do some more analysis on this one a little bit later. Let's get our equity indexes up there. Let's see, no breakout trade yet on the Dow, okay, but price is moving higher. We do have a prep screen zone, and with the Dow, we still have that unfilled inside day gap. Narrow overnight range implies a trending environment, okay? Today, at this moment in time, price on the Dow is gapping outside the prior day's trading range, 5 minutes away from the market open. Now, when price gaps outside the prior day's trading range, we often do not see that, or we often get a gap and run, not a gap and fill. Okay? So we have a small Globex range, price gapping outside the prior day's trading range, implying a gap and run up to the upper levels here, okay? So upper levels, unfilled, inside day gap. S&P and the NASDAQ have already completed that. We're just waiting for the Dow. All right, Russell, or note the prep screen zone. Now the Russell may do something a little different because we had, it's just the Russell. But we do have that support area, okay? Now, very often, okay, well, wait a minute. Hold on, let me get the information, make sure I'm saying it right. Currently, on the Russell, price is inside the prior session's range, implying a gap fill at or near the open, okay? It is an outside day, but opening inside the prior session's range, which often leads to the gap fill. Now, if the gap is going to fill, which direction does price have to move? Okay. Now, do we have a setup to take the trade as a breakout? Well, noting the Russell and that Globex low, we need to make note that there's no speed bump until price is a little bit further away. Okay. Meaning a breakout trade on this is a very high probability to get a nice move. And I would set your target, first target, roughly about 1759. If the markets do continue to sell off, then we would look for that opposing zone at a lower level, okay? With a narrow overnight range or small overnight range, we're looking for trending environment, okay? Breakout trade on Russell to the downside. And we'll probably see how our indexes kind of are mixed, because we just said, the Dow to the upside, NASDAQ potentially to the upside, okay, as far as being set up. We might get all of them too, okay, with the light volatility or the light volume, high volatility. Now we're 2 minutes away from the market open. So the two candidates, long on the NQ, going up, target 318, we already have that trade set, okay? I'm also going to bring up the Russell and look to set up a trade ahead of time, going short, 1767, okay? RTY or the micros, whichever fit your trading plan. What was it, 1766.80, which is the low of the session. Okay, and I will adjust my stop loss once the breakout occurs, okay? All right, so we have several trades set up at the moment. We are in our copper trade. Hey, look, it just paid for your monthly subscription. How about that, okay? That's where you want to be. If you want to be around traders and you want to cover your monthly subscriptions, you come in and grab that right there, okay? Oh, nice. All right, so crude oil. How many are participating in oil or copper at this moment? Markets are open. Just going to look for a little bit more. Okay, Stephen, good. JP's on oil. Okay. Copper bouncing around. And I'm a little underwater on the wheat trade, okay? But wheat's just now opening up as well, okay? So back out to our candidates. We just had Dow, okay, is still in a supply zone. Okay, we may see a move back down. Of course, it's a 90-minute time frame. 5 years looking for a breakout to see if we have a new buy territory. Crude oil we're already participating in, and of course 10-year Russell 90-minute chart, also looking for the move to the upside. Small time frame, we might see that break to the downside. Okay. S&P, also a fresh accumulation of orders potentially, and looking for that breakout to the upside on these higher time frames. Okay. I'm using higher time frames because that's where the setups are, the picture on the price chart. Okay. So we don't want to lose sight of the bigger time frame. Okay. Now the Dow is in a sell territory, whereas Russell, S&P, and 5-year and NASDAQ are still working their way up to it. Okay. So we can see a little mix at the open. Okay. Russell moving up. Dow getting a little pullback. NASDAQ just hanging out, and S&P, okay? So let's take a moment and assess the cash value here. As we assess the cash value, okay, we take the number of Dow 30 stocks that are greater than 94 cents. We got 6, actually 5 now. And we take the ones that are negative over 94 cents, 1. Okay, so let's see, we got, 6 and 1, 6 positive, 1 negative. Net results is 5 positive. Multiply that number by 2, and you get a value of cash. Okay, cash equals positive 10. Futures are trading at 7.25 on the S&P. They're pretty much balanced. Futures are neither oversold or overbought at the moment relative to cash. Okay. Stocks on the NASDAQ, gap down, getting a nice little push back to the upside. Okay. Starting to show a little more positive. Okay. So our NASDAQ breakout trade to the upside is looking pretty good. Okay. Nice little trade setup on the copper, and let's take a moment to go back and look at how is the Treasury doing. Okay, Treasury yield showing a little weakness at the moment. Okay, dollar showing a little weakness. Trend, okay, trend is still low. Time to go. Again, we take a lot of things into account that we're watching and monitoring. Okay. Boy, that crude just keeps going back and forth. Make sure you're taking your profits on these smaller moves. Okay. I mean, it's still chopping sideways. Okay, but there was an opportunity to make a couple $100 on some of those trades. Okay. All right, so as we come out, let's take a look at the BKX and the one-day volatility index, okay? So BKX often can give a direction where the banks are putting money in or taking money out, okay? BKX, I'm also going to make a watch list as part of our pre-market routine workspace, is make a watch list of those 24 stocks that make up the bank index so that we can get a pre-market indicator going on with those stocks, whether they're bullish or bearish in the pre-market, to help assess where that momentum may come into play at the open, okay, based on what the bank index is doing. As we are watching S&P right now, we have made several touches of this area in the overnight Globex session as a resistance area, okay? We also can see that we have 3 touches over here as far as support. The area in between support and resistance is what we call the dead space. And I need to be monitoring that yield over here. Okay. And the yield is just still chopping back and forth in a small range. A lot of uncertainty that we're going to expect as the session opens. Okay. So again, checking the trend. We only have one economic report, 4 Fed speakers. Okay. All the indexes are an outside day at this point, so we can take breakout trades. Okay. I have some candidates set up. These were all posted in our Discord room for you to take a look at, verify the information, and see if it fits in your trading plan. Okay. Seeing a little move up on the treasuries, so we might see a little fluctuation in some of the other products there. Okay. You also notice as you
Order filled.
get to know me and participate in trading, okay? It looks like I got stopped on wheat. No? No, it's copper. Yeah, wheat coming a little deeper. As you get used to me as trading and seeing what I'm looking at in the price charts, you'll notice when I start teaching that there's not a lot of trades that I'm willing to jump into. You can also use that as a potential odds enhancer, okay? All right. All right, so index moving up, NASDAQ still chopping around. Resistance and support, we have dead space. Inside the dead space, supply zones and demand zones don't often work. Big strong move up on the bank index, implying that movement should be more to the upside. We're still waiting for things to settle out. A key thing to remember is when traders are returning from a long weekend and a long holiday, it takes time to unwind their hedging and get back into the swing of things, okay? So as we are seeing the morning session open, this is mainly the first day that a lot of the banks back open, a lot of the traders back on the trade floor, okay? They're starting to maneuver and get ready for the week, okay, and going forward. These are key pieces of information that tell us that these conditions in the marketplace are a little more difficult to trade, okay? When we recognize that the markets are potentially a little more difficult to trade, then we can take defensive action and not make big positions, but stick with some smaller size with that pending volatility, okay? So far, the equity indexes have not shown a whole lot of direction. We do have some trades set up. Okay. Now, let's go back to our pre-market analysis, our pre-market information, okay? We have that narrow Globex range, okay, which leads to, in many cases, more trending environment, okay? A wide Globex range can be very volatile, and we look for the bull trap and bear trap. The normal Globex range, we look to verify if price is in that normal range, and whether it's inside or outside the prior day's trading range to get a little more of a direction, okay? That information is helping us be a little more patient. Now, more often, when we gap outside the prior day's trading range, we don't fill the gap. But our last 4 times, this will be the 5th time if we fill the gap as we have gapped outside the opened outside the prior session's range, okay? It's important to keep this documentation to you so you know when things are starting to change, okay? Now, it is much less probability that we fill the gap the same day when price gaps outside the prior session's range, okay? Versus gapping inside the prior session's range, and whether it's an inside or outside day, okay? All right, so back to the Russell, okay? Of course, it goes up when we're looking to take a trade short. Good old Russell. The Dow, looking to close to filling the gap. NASDAQ has come back and filled the gap. Now we do have 3 touches, okay? So we have a couple of these areas where buyers stepped in yesterday at the close. And we have formed a support and a resistance area. But the market is still chopping sideways. The information that we pulled together this morning, okay, is also showing that the equity indexes were not the main product to be trading, okay? I know a lot of you trade the equity indexes and you're just sitting there waiting to take a trade, okay? But the equity indexes are really not the place to be at this moment in time, okay? The internals, yeah, the trend is low, but the markets are going sideways, okay? They're not high or low at the moment, okay? Advancing issues over declining issues, yeah, we got a few more bullish advancing issues over declining issues, okay? The tick, we went in and found some buyers, okay? And now price is backing off. The VIX is actually back in kind of that neutral area. It's not in that extreme fear or extreme complacency. It's back closer to the middle, okay? This information just gives us some feelers of what the market's doing. Now, most of these, the trend, the tick, advancing issues, declining issues, and the VIX are all very closely related and get much of their information from the stocks on the New York Stock Exchange or the S&P 500, okay? Now, with the S&P 500 being a market capitalization weighted index, this simply tells us that the larger market cap stocks move that index more than the smaller market cap, okay? But we're paying a close attention to the equity indexes, S&P and the Dow, mostly when we're looking at this information. All the Dow 30 stocks trade in the S&P 500 index, so that you will see the VIX as part of that volatility index, okay? Options on the SPX, and of course the New York Stock Exchange, advancing issues over declining issues, and so on, okay? All right, quiet day on crude oil, a few little trades on that. And I'm looking for a way to get into nat gas based on the information that we looked at over on the left. Yeah, let's come back and look at that. All right, so as the market opens, okay, we all want to make a trade. We all want to jump in, okay? The Treasury is, broke that support and now using old support becoming new resistance. Or because the markets were closed yesterday, is price going to come back up on the 10-year yield? If the yield moves back up into this range, looking to the left, this whole area has been used up. Okay? The yield could get a swift move back up to a resistance area. And that kind of a move on the 10-year yield is going to send our equity indexes, bonds, metals, agricultures, and FX markets all to the downside. You just get an understanding of what the yield has been doing as being inverse to the market conditions. And then let's take a quick look at the dollar. Dollar is getting that bounce. It's made a higher low, but not yet a higher high. So we're starting to see some of that transition, okay? And if the dollar keeps moving up and yield moves up, then we know how to play the equity indexes and what to look for, okay? Okay, so we do have trades set up for the breakout on NQ. Targets in mind. Dow, just back and forth. I'm not even looking to participate in the Dow at the moment until I have a better setup. Russell moving higher. Prep screen zone up above. Let's look to the left and see what we have in this range. Over on the left-hand side of the chart. Oh. Okay, on the left-hand side of the chart, we have Russell, okay, that I'm looking at right now. And Russell has that little pocket of points inside that dead space, or inside the sell territory. It actually has a couple of little ones right in here. Okay, so there's nothing in the way for the Russell until it gets up to 1806, 1811. Okay. We might have something right about that 1794 range, but there's still some upside potential on this. Okay. Always look left and then look right. Okay. Make sure you know what's in the way. Now, even though price is moving above the Globex high, that doesn't mean I have an entry. With the narrow range, we're expecting more trending market conditions, okay? We are also expecting, okay, let me regress from that. A lot of information that we collected in the pre-market, and we're just waiting for prices to come to us to get a good direction. 6 Dow stocks greater than 94 cents, and 1, 2, 3, 4, 5. So we just have one positive. Cash equals positive 2. S&P futures are overbought by about 5 points relative to cash at this moment. Now, notice how I said just the relationship. Futures are overbought relative to cash. I did not say take a trade. And that information does not make a trade. It just helps us understand the environment. Futures are overbought relative to cash. Futures overbought going into a supply zone. Futures oversold going into a demand zone. Then the trade comes into play. Always important to understand that in the pre-market analysis, and as we're putting these things together and looking for trade opportunities today, okay, that these opportunities must have information to support the trade and the direction. They also must have a way to enter the trade, okay? So we have a method of gathering information and we have a method of executing on a trade. The reason I'm bringing this back up is on the Russell, it's had a very nice move off of that support area, okay? But it doesn't mean I had a trade opportunity, unless you're just hitting the button and jumping in, but that's not what we teach, okay? So understanding the environment, understanding that we have to wait for price to come to a zone in order to manage risk and execute on a trade, okay? All right, let's just cycle back through. Trying to monitor the yield over here. Well, copper is working out for us. did get stopped out on wheat. Okay, so I got to recover on that. So let's do that one. Now, we do have potential breakout above 580 on wheat. Okay, there were some short-term trades. Once prices violated your zone, okay, just remove the information off your price chart. Okay. What I don't want you to be doing is concentrating on your losing trades. I got stopped out of a couple of trades today. Got stopped out on an oil after it was profitable. I got stopped out on wheat. But I'm not going back and looking at those trades I got stopped out on because my focus is to make money by trading. Okay?
Order filled.
When I start focusing on my losing trades, I keep creating more losing trades. Okay? And some of the psychology that we put in play here, okay, is also important. We will recover and get our money back on other trade opportunities. Okay? So I'm watching corn. Wheat is off the table until I get down to 549. Actually, I'm going to set that up ahead of time. Let's come down to wheat. Placing a trade on wheat, 549. Yeah, wheat is quite the extraordinary trade. When it moves, it really moves, okay? But you have to manage your risk on those. We have a trade set up on wheat. I do like the bean oil also because it's in a higher time frame zone. Kevin, that's a great observation. I'm kind of noticing that too when we make some snapshots, is that, the zoom was a little bit better quality of the picture rather than doing it on YouTube, okay? Now, I don't have an answer for you, Kevin, whether it's on the YouTube or whether it's on your end. Okay, so I'm waiting on bean oil. Looks like the ags are selling off. Let's see, Swiss francs doing good. Wow, these markets went really quiet. Russell did break out on our 90-minute to the upside, and we can see that we have a nice pocket of points up there. S&P also has that pocket of points to the upside. If you're going to take a breakout on the S&P larger time frame, make sure you're managing your risk by looking for that leg-base group of candles before that breakout, okay? And also get in your trade plan. I'm going to come up here using the 180-minute chart on the ES. Oh, thanks for that, Anil. Yeah, Kevin, Anil responded to that. I guess there's some settings to go from a lower quality setting. You have to manually higher value in the device resolution. Okay, cool. Appreciate that. I'll come back to that in just a moment, Ms. Chris. Now, For the breakout on the S&P, notice we have our resistance where we captured most of the touches. And there's this little area right over here, which we classify as a speed bump, okay? If you're going to participate in the breakout trade on the S&P, larger time frame here, okay, you must be prepared that it may be just a short-lived going in here and then pull back, okay? You want to look to the left. The other thing that we will be covering a little bit more in that is once we do get the breakout, covering more in the Mastering the Charts review and recap, okay, is always reflecting on the structures. When does a speed bump become less of an obstacle? By looking at using the resistance area as that pivotal point, we can see where the sellers kept coming in and pushing price down, okay? Another way to look at it is there were more sell tickets in this range than there were buy tickets. What's important about this is the structure that is created in the buy territory. Want you to take note that most of the touches were over on the left-hand side and the lower pivot middle to the right-hand side, okay? Now, what this alerts me to is that I may get a short-term breakout, but I have to be prepared for getting that price breaking out and then coming back down into the area. Okay, so I have to manage my expectations and my risk on a trade. I'm going to drop down to a 20-minute chart, looking for that leg base group of candles before the breakout. Before any breakout, having that leg base group of candles in play can help us assess that if I choose to take that breakout trade above 43.83 and change, okay, my stop loss will be at 43.65. Now, I might be willing to do that on a couple of micros. Might be willing to do it on a couple of minis, okay? That is based on your trading plan. But taking that breakout and seeing the speed bump over on the left-hand side, okay, we could get a short-term move and price pulling back, okay? Now, all of that being said, we are looking for more trending markets, okay? Why are we looking for more trending markets on the on these products today? It takes us back to the narrow Globex range, okay? We have filled the gap. I'm going to participate in that breakout.
Order filled.
Okay, just using a micro. And come back to my other chart here. My stop loss needs to be 43.65. So on one
Order
micro,
filled.
okay, looking for that 43.65, okay? So I got about $78 worth of risk. Since we had a narrow overnight range, we were expecting more of that trending environment. Just cleaning up my chart. Okay, so watching the speed bump over on the side here, as you map out the structure in the buy territory and sell territory there, okay, you will start to know when the speed bump is going to be more relative. Now, as we look above that speed bump area, we can see that there's still some choppy area, and right above it, we have that pocket of points as we approach the target range at 4,500, okay? All right, so back to Chris's question. Sorry for the delay. We are long the NASDAQ as well. Chris said, good morning, Jeff. Let's see, prep screen zone on the NQ. What's the distal of the buy? It is possible that I did a typo. And it is. I do have that wrong. Okay, 14. Yeah, I'll fix that. Yeah. Thank you, Chris. 14,659 and 3/4. Okay, so anybody participating in these trades on the NQ and S&P at the moment? Watch your time. 10 o'clock. Okay, price breaking out. Nice job. Okay, first target 43.91 on the S&P, but going back out to the larger time frame, you know, you have to be prepared for that speed bump and the 10 o'clock reversal. Okay. Good job, Janet. Okay. NASDAQ. Russell's looking good. S&P. Dow's struggling a little bit here, okay, because it's in a sell territory. And Russell's in the sell territory, but still has a lot upside there. Copper, how are we doing on the copper trade? Wow, nice move on copper. What else we have? Wow, NASDAQ ripping. Nope, I do have 2 micros on this one. Again, what I want to point out here is that in the live trading room, once you're comfortable and once you understand your personal trade plan, okay, it's not difficult to recover your tuition, okay, and what you put in as an investment into yourself to be part of this. Now, I know every trader that comes into live trading and education like this wants to recover their tuition quickly, okay? Now, once you recover it, then, you know, it's not that you're just going crazy. You're just saying, okay, next day I want to cover my tuition again, okay? Having small trades, even on micros, okay, you can accomplish that. Observe first, develop your own trading plan, okay? And then just use the references here that we're putting out there to see if it fits into your trade, okay? All right, so currently still in the S&P. Let's verify if futures are overbought relative to cash or futures are oversold. And right now we're seeing that we have 13 down stocks up and 3 down. So 10 times 2 would be 20. Yeah, cash and futures are balanced. Okay, so when futures are oversold or overbought going into supply or demand, okay, then we have a trade. When futures and cash are balanced, it's not the best trading environment. Okay, corn's coming back a little bit. I'm not jumping on that one. In the Discord room, we did post the Japanese yen. It was a little volatile, as was the yield. Okay. Bean oil. Let's watch that one. There's an entry for a large time frame, 53.53. Okay. Here comes Dow coming around the far outside. Dow is the one that's holding things back at the moment. Okay. Noticing the stocks are getting a little weak. Google, Microsoft, Meta. Okay. They're not showing green candles, they're showing red, so we're seeing a little pullback on the NQ. Okay. Now my stop loss is in place to let this trade work. Okay, I intend for price to continue to move up. Okay, but we're getting a little heat. The stocks control what this index does. Okay, take a quick look at that as we are looking at the top 8 largest market cap weighted stocks on the NQ. Wow, we're seeing a little bit of weakness come into play. Let's see, bank index is still on the right side of the fence, and now things are starting to get a little choppy because the one-day volatility index is back on the wrong side of the fence. So we see when the markets are trending to the upside, the BKX will be on the top side of the moving average, and the VIX one-day volatility index will be on the bottom side. Okay, when one is when it's not doing the right thing for an uptrend or for a downtrend, the BKX will be below and the VIX will be above. Okay. Now that they're both above, then we're kind of expecting some choppy sideways market condition. Okay, until they resume back the direction they want to trade. Now, this information on the price chart, okay, is helping me stay in the trade or jump out of the trade, along with the information over here on the 10-year Treasury yield. Okay, the yield had started to move down out of that area, still making lower highs, but not yet made a lower low. Okay, if the yield moves down, then I want to sit through some of this information. Okay, now, or some of this picture on the chart. Okay, even though the P&L was up and now it's back down. Okay, once you choose to get out of the trade, okay, at a profit or a loss, you have to wait for the next setup. Okay, actually the bus only stops at the bus stops, not just as you're walking down the road. Okay, so once you get off the bus, you're going to have to wait for your trade setup. Okay, the next one. Okay, nice little push to the downside. Glad I had my stops in place. Okay, Nat Gas, seeing this consolidation and still looking for it to push, potentially break below the 3.319. Gold just hanging out. Now I'm just cycling through things, yeah. Hey, GP, uh, yeah, it might be a little more, for Liz to type all of her rules into the chat, but one thing I do want to point out is that, after these sessions, Liz does often frequent our voice channel in the active income, okay? So in here, we share a lot, okay? We start looking at different information in the general chat, okay? Where we can talk to each other, the active income, we do have the voice and the ability to share our screen and put things together, okay, there. So there are resources for that, and I'm gonna grab that link, and I'm going to post that in the chat right here, so you can be part of that. Okay. But it's okay to ask questions in here too. I don't want to shy you away from it. Okay. It's just that Liz has some fantastic rules and guidelines for her trading plan, and sometimes it takes a lot more than just texting in the in the chat to explain it. All right, so we're still looking good. S&P moving up. In Q, we sat through a couple of little bumps on that pullback. Why did we sit through the bumps on this? Who can understand why we did? Okay. One is we're expecting that choppy sideways action right now because of what the volatility index, one-day volatility index is doing versus the BKX, okay? We're getting that sideways action when they're not both on the opposite side of the moving average, okay? We see that happening, okay? But there's no indication to get out of the trade at the moment, okay? It just means that the market conditions were going to go sideways. Okay, so S&P is still looking pretty good. Let's come back and look at that S&P trade. Okay, we're still in that speed bump area. I also want to point out that between 8 a.m. and 11 a.m., we start to see where the big banks and institutions start moving things around, okay? Also, on the quarter hour is where we see banks and institutions making trading decisions, okay? Now, on the quarter hour, okay, if price is intersecting with the supply or intersecting with the demand on time, often there's you get the desired result, going short in supply, going long in demand. If price arrives into the supply zone or demand zone before the quarter hour, okay, 4 to 5 minutes before, often that trade will get a little pullback out of that, okay, and then it will go through that zone, okay? If I choose to take profit on the S&P, either I find a supply zone to take a trade, or I have to wait for price to return to a demand zone to take the trade. I want to make that really clear. Gathering information, looks like we're starting to push through that speed bump, okay? We're right on the quarter hour, prices are moving up. NASDAQ's back up. Let's double check what else we have. We got copper. Copper's doing good. And make a quick reference out to what's going on with the yield, okay? keep in mind, the big players are just coming back in, they're getting all comfortable, the yield going down, indexes will keep going up, okay? Dollar, where are we at with the dollar? Dollar is still pushing lower, okay, but we have to watch for demand zones below where we might see some possible pause or move in price, okay? Let's go out to the internals, okay? We see that there's more upticks coming into the market than downticks. People are buying. We see the advancing issues are climbing over the declining issues, okay? But we're starting to get into that area where things could get a little bit choppy, okay? Now, I'm going to be willing to take profits here soon. The trend is low and the markets are ascending. So what is happening on this move up at the moment? If you understand the trend, you'll see that they take the upticks over the downticks on the New York Stock Exchange. Then they take and they divide them into each other and get a number. Then they take the advancing volume over the declining volume and they divide that into each other. And then, of course, divide them in. Now, when the trend is low and the markets are ascending, what this simply implies is that there's more selling going into the move up than buying, okay? Just the inverse. If the trend is high and the markets are dropping, there's more upticks and up volume coming into the market. In essence, they're putting the brakes on the move down if the trend is high. If the trend is low, they're putting the brakes on the move up, okay? Now that we have this piece of information on the trend, okay, and we see that the tick is maxed out, okay, we have to be prepared that if price is running into a supply zone, that we're going to be taking some profits quickly. Yeah, it just came into that prep screen zone I had marked. Okay. Did it arrive on the quarter hour or a little bit before? I wasn't there to watch it. Sean, thanks for asking. On the ES, the leg base before the breakout. I'm breaking it down. 20-minute chart. Okay. Now, why am I not just jumping out of things right now? Okay. Yeah, we're going into a supply zone, okay, but the market has been moving up. What was one thing in the pre-market routine that said we're going to have a longer trending session? What was one thing we collected in there? Anybody remember? There you go. Thanks, Liz. You just the tight Globex range or small Globex range. Okay, so what did we talk about as far as a small Globex range, and what were we comparing that Globex range to? Okay, now when we had a small Globex range, 40% or less than the daily ATR, often we get into that trending environment. We did it yesterday over here. Therefore, look at making higher lows, higher highs. The trend is more to the upside, okay? It is, we're about 10 minutes away from the bottom of the hour. Okay, we do have another round number up here, okay? These areas on the daily chart, take those out. 50 days simple moving average is up at 44.65, 66. We have another level along the way around that 44.27 area, okay, which are all above. Okay. The yield did drop. Okay, it's starting to base. You, you know, anytime that you guys are in a trade, you're monitoring a lot of different pieces of information, okay? When you're in the middle of a crosswalk, you're monitoring all different pieces of information, okay, to help you get to the other side, okay? Anytime you feel like you want to take a profit, then do so, okay? And then document the rest of the trade and follow it through. In time, you will learn when to stay in trades longer, when to use the information that we're providing for it. Very methodic, okay? We're not using algorithms or all those things, but we are aware of them, okay? And we are aware of what conditions are going in the market, okay? We're using documentation every morning to assess when we have trending days, when we have choppy days, and when we have, we look at different products to trade other than the equity indexes, okay? An inside day on the equity indexes means we wait till roughly 10:30, 11 o'clock to start executing trades on the equity indexes, okay? It takes a little more time for them to balance out, okay? So always learning, always documenting what we're seeing on the price chart, okay? All right, I am about to take some profits here because we're coming up to the end of our session, okay? I have 3 positions on, okay? Copper and S&P and NASDAQ, okay? I only have 1 contract on copper. 3.6235. Yeah, we did hit that volume weighted average price. Okay, so I'm going to capitalize, take a profit on the copper trade right here. Okay. I'll give you guys just a couple of seconds. If anybody's trading that and wants to, you know, I'm getting ready to take my profit on this one.
Order filled.
Okay, so out of that one, as far as the S&P, I realize we're still in that speed bump area. I don't want to take a loss on the trade, so I'm going to come down and find my protective stop loss, which the initial trade that we got into, we had $78 risk on the trade when we opened it. So I'm going to reduce that risk on that trade and let things continue to move, okay? Now let's go to the NASDAQ. NASDAQ, the same thing, okay? Our initial entry, let me come down here. I'm just going to move my stop loss up to a break even. Okay. Target 15,318. Okay. And we're starting to get the stocks back on the right side of the fence. In each of the futures products, the underlying asset, stocks in the NASDAQ 100, stocks on the S&P 500, okay? These are what move this index. If you wanted an odds enhancer to see whether to stay in the trade or not, you look at the underlying products that make up the index. In this case, I have the top 6 large market cap weighted stocks on that. As long as they're all moving up, then this index is going to continue to move up, okay? Also take note on a daily chart on the NQ, price is approaching that 50-day simple moving average. Now the 50-day moving average on these indexes, especially on a daily chart, okay, are very important places where the retail comes back in and becomes bullish, and where they step out, bearish. Bullish above the moving average, bearish below. Price closing above the 50 moving average is going to be bullish for the NASDAQ, and we are so close to it at this point, okay? In fact, breaking above this 15,318 would put us above it, okay? So that'd be that target area, and then we could look for our prep screen zone up above, okay? How we doing on, oh, nice job, Liz, on the Russell. Beautiful trade. Yeah, I'm not looking to go short on that yet, unless it gets up to that 1806. Okay, as we come to a close in our session, okay, for this morning session, I want to remind you of the Discord room. A lot of things happening in the Discord room, a lot of updates. There's still a few updates that are coming out. Announcements, okay? A lot of things going on, and I'm just going to recognize our pricing. Live trading room, which you sent through today, is $150 a month, okay? These are individual. Mastering the charts, review and recap, $99 a month, okay? If you want a combo package along with the community trading room links, as we do these each day, okay, it's $199 a month, okay? So when we're looking at the trades we have taken this morning, okay, does one or two trades, 3 or 4 trades, do they cover your expenses? And anytime you're looking at partnering with somebody or learning the methodology, you want to know if you're going to get a return on your capital, okay? So take that in consideration. These will all become active, I think, next week. And for those that already have a subscription with us, the team is working on a few things on the back end as we are still in that transition and getting you guys caught up, okay? It is not just once a week until November, Chris. It'll still remain the same, so I can honor all subscriptions. We may continue to do it 2 days a week until I have Mastering the Charts Part 2 coming out, which I did outline that. Some really cool stuff coming out on that. And Mastering the Chart Part 3. I did put those things together, and those are coming up. There will be packages where for Mastering the Charts Part 1, Part 2, and Part 3, or you can just take them one at a time, okay? So, as we wrap up our session, we're still profitable on, ooh, nice job. Just moving that up out of the way and removing this, okay? Next area, round number, and we're right at the bottom of the hour, okay? So profit, 1 micro on the S&P, which is less than $300 worth of working capital, okay, on TradeStation. If you're using somebody like TradeOvate, $100, okay, actually no, $50, okay, so you made a great return on the capital being used, okay. As far as the NASDAQ trade we're in, beautiful, 2 micros, okay, using about $600 worth of working capital, making 200, 30% return on the capital being used, beautiful. And we did take a profit on the copper trade, which I'll probably regret getting out early, but we'll do it. All right. I am going to now sign off. All of the prep screens are on the Discord room. If you want to go back and verify them, okay. There's some information there that you can go back and look at the zones and plot them on your own charts. I will be in the Mastering the Charts review and recap, where we're going to do another live stream today in about 1 hour, okay? So make sure you're looking at the announcements from the TMI team, which has done a phenomenal job in supporting everybody and supporting me in putting all this together. I wish everybody a wonderful trading day. I'll see all of you in about an hour over in the Mastering the Charts review and recap, where we review the live trading room and some of the things we are covering today, and we do a couple of little lessons, okay? Have a great rest of the trading day, and thank you, TMI team, for the backup and support. Signing off.